Hello everyone, hope you're well, and today we're going to be introducing a second indicator to the equation. So I use three indicators. One is already plotted on the chart, which is the exponential moving averages. The second is MACD, which stands for moving average convergence divergence, or MACD for short, and we're going to be introducing that today. And the third one is called RSI, which stands for relative strength index, and we'll be covering that on the next video. So first things first, let's get MACD on the chart. So we're going to come over here to indicators, or press /, type in MACD, press it, and now we have MACD here. Now, as a personal preference, I would rather have this above the price action. This is just personal preference. You can keep yours here, or if you want to follow along, this is how you do it. So you come over here and you press merge up, and then you come over here again on MACD, hit the line, and you press unmerge up. And then you come over here, fix this bug, right click and press left axis. So now we have MACD on the chart, and you can customize this as you want. I like to keep mine around here. So now let's customize MACD. You can press here on the gear icon and you can format MACD as you wish, right? Now, MACD is composed of two lines, and one line is a moving average, and it's derived by subtracting these two numbers. And the signal line is simply an exponential moving average. And I don't change anything here, so we're going to keep it the same, but we will change some of the colors here and the style. So on histogram, I like to keep mine green, and I don't like to keep it as a histogram. I like to keep it as columns. As you're going to see next, columns are a lot more visible to see the small ticks in MACD. So this here, we'll keep it as blue, and signal, we turn to red. All right? That's all I do on MACD. When you double click here on MACD, it will expand to full screen. And I just want to tell you something before we proceed. So the MACD can be divided into two sides, right? A positive side, which is above 0 and is this side over here, and a negative side, which is this side over here. Now, the MACD strategy is as simple as buying on a crossover of these two lines on the negative side, so say right here, and sell on the crossover when it happens on the upside. So if we go back to the chart, in this case, you would have bought right around here, and you would have sold right around here. Needless to say, this is a handsome profit of 68% in 2 weeks, all right? Now, there's a lot more to it than just that. What you want to do is you want to buy as low as possible on the MACD crossover. You don't want to buy if the crossover happens right here. Although that worked out well, this is not a buy signal, okay? A buy signal is as low as here. This is a beautiful buy signal. Obviously, depending on what time frame you have, this will change drastically, and they hold a lot more meaning on a higher time frame. But let's go over here to 1 hour, and you're gonna have a lot more buy and sell entries, right? Let's change this to a 4-hour chart, and as you can see, the MACD lines do not stay down here for long, right? As you can see here, they don't stay here for long. There's always a bounce after it happens. So what you want to do is you want to buy as low as possible on the MACD crossover, and you want to sell as high as possible, right? So something like this is an obvious buy, right? And this was over here on the 21st of December when we spiked very low and then we had a bounce, right? So this over here is still a 32% trade in a matter of a day and 16 hours. So let's write this down. Crossover strategy: buy when there is a crossover on the negative side as low as possible. Sell when there is a crossover on the positive side as high as possible. So that's the crossover strategy. But the main reason that I use MACD is not only for the crossover strategy, it's actually for the histogram strategy. So the histogram strategy is basically a more advanced crossover strategy. For that, let's get rid of this and let's go back to MACD here. So as you can see, when you zoom in, you can very easily see these ticks on the histogram. And these ticks are very, very powerful and neglected by traders. And I don't want you to do the same mistake. These ticks are serious money makers. So let's first examine what these ticks mean. So you can see that every single time that there was a crossover on the negative side of the MACD, such as here, 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 etc., the histogram ticks to the opposite side, right? And you can see here when there's a crossover on the positive side, the histogram will tick on the inverse side. So it will tick to the downside. So let's examine it a bit closely because I want you to get this very clearly. So you can see here at this line, you can see these lines match perfectly, right? The moment that there's a crossover, the histogram moves on the opposite direction. If it's a crossover on the negative side, the histogram will move to the upside. If the crossover is on the upside, the histogram will move on the opposite direction, okay? And now let me tell you why this is so powerful. So let's examine some upticks here, okay? Let's look at this here. You can see here that this bar is the top, right? This bar here is the tallest bar, right? And then you have the second bar that is smaller than the previous bar. You see how this is taller than this, right? Now, it is almost never the case that you have the top, then you have a bar that is shorter than the one before, and this keeps going up. It almost never happens. So let's see here. You have a top bar, you have a lower, and this proceeds down. You have a top bar, you have a lower, and it proceeds down. Over here, this bar, the second bar was smaller than the first bar, and it kept going down. I'm glad we saw this one. You see here how although the third bar is still bigger than the second, it's still smaller than the first one, right? So you can see you have the tallest one here, then you have the second tallest here. What this means is you have confirmation that this is very unlikely to go higher. It's very unlikely that the bars after this will go and keep going higher here. Very unlikely. Tallest bar, then you have the second bar lower, keeps coming down. Tallest bar, second bar lower, keeps coming down. Same here. Same here. Same here. Same here. Same here. Etc. Okay? And these small differences are actually substantial, right? So let's see in this example right here. We're still in Bitcoin's 4-hour chart, and now we're in April. If you're applying the crossover strategy, you would have sold right here, right? You would have sold or went short right there. But if you were using the tick strategy, you would have sold right here. Now you may be thinking, hey, is this such a big difference? Does it even matter? Yeah, it quite matters because it's a huge difference. So here, you would have sold right here, right? You would either sold or went short right here, which is April 25th at 4 a.m. But if we're going short or selling right here, that's April 24th, 8 p.m. Now let's look at the chart and see how this changes. So that's the difference between selling at the very top of the uptrend, as you can see here, at the absolute very top, right? You can see this is 24th of April at 8 p.m., right? So is this. You can always see here what I mean right here, right? 24th of April, 8 p.m. That's the difference between selling here or selling right here, 25th of April, 4 a.m., which in the chart is right here. It could be the case that you either sold right here at the very top or already here 6% lower. Do you see the huge difference that this makes? It's a huge difference, guys. You need to capitalize on it. Now let's look at a daily level because recall that the longer the time frame you're in, the more meaning your indicators carry. Now I showed you based on Fibonacci and candlesticks why a lot of people entered this right here, right? Now a lot of astute traders enter this with MACD as well. So if you get rid of this and come over here to the MACD, if you're using the simple crossover strategy, you would have bought right here. And this is February 10th, right? But if you're using the tick strategy, you would have bought right here, all right? And guess where that is? That is February 6th. That is this day right here. This candle right here, this daily candle, is February 6th. So you'd have bought here, and look at the return that you would have gotten. You would have made a 100% trade in a matter of 2 weeks. All right, so now let's write this down. Histogram strategy. Enter a position when the second bar is lower than the bar before it. It's as simple as that. This strategy is not an entry and exit strategy. This is just an entry strategy. This just tells you when to enter, does not tell you when to exit. Alright guys, so as if this was not enough, MACD is even more powerful than just the crossover strategy or the histogram strategy. MACD's histogram also has divergence, and it's so incredibly powerful as you're about to see. So let's start right here. We're here on Bitcoin's daily chart. You have 3 lower lows here. Okay, you have one there, you have one here, and you have one here. These are 3 lower lows and 3 key points. So if you come over here at the histogram, you will also have 3 different lows, but there's a small difference as you're about to see. So here you have one low here, you have one low here, and you have the 3rd low here. And you must be already noticing something, right? As you can see, these were lower lows, but this was higher lows. This is hidden bullish divergence because this was going up as the price action was absolutely collapsing. And what happened? The market rallied, and handsomely. It rallied a lot. And then you have over here 2 points. And these 2 points are symmetrical, right? So let's mark them down as well. You have one here, and then you have one here. And they're symmetrical in price, right? You can see the price is the same. The double top, right? But if you come over here to the MACD, you can see there's also 2 tops. And you already know where I'm going with this, right? These 2 tops are not symmetrical like these are, right? These 2 tops are coming lower, right? It's called a lower high. This was the highest, and then they made a lower high. This is, again, hidden bearish divergence. And look at that. The market came down, right? Again, look at this here. You have 2 zones here. One bottom, another bottom. And you have the same 2 bottoms here. Okay? And look at that. A higher low. Whereas in the price action, it made a lower low. Hidden bullish divergence, guys. Hidden bullish divergence. And you can keep going all day. Look at this here. 2 tops. Basically the same price, right? If you come over here to the histogram, it's not the same price. Hidden bearish divergence. We came down. And you know where I'm going with this right now again. You see here, you have multiple bottoms. You have here, here, and here. And these same bottoms are seen here, here, and here. Hidden bullish divergence. As the histogram was upticking to the upside, the price action was coming lower. And then there's this situation here. Let's go over to the 4-hour chart. As you can see here, if you've been following me on Instagram, it's no news to you that I disclosed a very, very heavy short position right here. I perfectly called the top, and I did so publicly, right? Let me tell you why. I knew this was a top based off of 3 indicators. It was RSI, volume, and MACD. I'm going to show you MACD here, and you're going to see on RSI and volume next. So you have 2 tops here, one here, and one here. And if you go over here to the MACD, let's get rid of this arrow. The 2 tops were here and here. And look at that. Same thing all over again. Hidden bearish divergence. This was coming down as price was going up. Does not get better than this, guys. Does not get better than this. So having said that, I'm going to wrap up this video. I hope you've enjoyed the course so far, and I'll see you in the next video.